Dynamics. I hope you're having a good day today. I wanted to come at you really quick with a live video. And real quick, actually, Lexi, you want to swipe down and make sure the Bluetooth is not on? I want to make sure they can actually hear me. So guys, I'm going to come at you with and I wanted to give you a really quick breakdown of how it actually works, okay? So number one, you're going to save money. Okay, that's the first step. You're saving money and you're putting it somewhere. Now, most of the places people save money, little do they know, have been around for not a very long time. So if you think about most people use IRAs and 401ks, what if I told you those have only been around since the 1970s and 80s? Okay, or mutual funds. The oldest mutual fund has only been around since like the 1930s. Okay, most of them are newer than that. ETFs, those are only in the last 10 years. So a lot of the places you put your money have no track record. They're not proven. There's no real like foundation and statistics showing that this thing works, right? So when you think about where am I saving money, that's where the sacred account comes in. So this is a vehicle that's been around for over 150 years. It's something the top 1% of wealth have used for that entire time period. And we can actually look back and see that it's performed and it's never lost money during that time period. For 150 years, you would never have lost money with a sacred account. So that's why it's a good place to save. Now, if you're putting money in the sacred account, you're going to put in at least $500 a month. Okay, that's the bare minimum. You could do more. I do monthly, right? So I put my own money into a sacred account. I do a monthly base, and then I can dump more in throughout the year if I want to. But you need to do at least $500 per month into your sacred account. Now, as you're putting the money in, the first thing you do is you do that contribution. As you put money in, you have access to about 75 to 95% of whatever you've contributed. Meaning, if you put in $1,000, you'd be able to take out somewhere between 750 and 950 of that 1,000. Now, where does that other money go? Now, the sacred account is life insurance. So if you didn't know that, it's high early cash value, dividend paying whole life insurance. I know that's a mouthful. It's not as complex as it sounds. So some of your money is going into your cash value. Some of your money is buying life insurance. Now, you're probably thinking, well, I don't want to buy life insurance. Why would I buy life insurance? I agree with you on that point, and the reality is you're not actually doing it for the life insurance. So what most people don't know is if you set a sacred account up correctly, the life insurance actually acts as an equity share of ownership in the insurance company. So for every $1,000 of death benefit you have, it equates to 1 share of ownership in the company. By owning that share, the company pays you their profit in the form of a dividend. So by owning a death benefit, you get dividends. Now, the dividend is a guaranteed 4%, and historically over the last 150 years straight, it's averaged about 6 to 8%. So it's kind of like buying real estate. You put money into the real estate. Some of that money goes towards principal. You can't touch it, but it's producing rent or income. Some of that money is equity that you could pull out right away and borrow against. Same concept. Okay, so you put the money in, you contribute, you accumulate, and like I said, it's growing at 6 to 8% gross annual dividends. That is tax-free growth, and your number one goal initially is to get $50,000 in your sacred account. Nothing magic about that number. $50,000 though, the reason why that's the number is that's how much money it's going to be required for you to borrow out to invest. Now, you can borrow anytime, but I'm just telling you, if you want to borrow to invest, you need to have at least 50K or you can't really do anything. Okay, so you get 50K in the account, you borrow against it, you invest it, you're earning 6 to 8%. When you borrow, you're paying interest. By paying interest, you're avoiding taxes, and because you borrowed, your money never left the account. So you're still getting that 6 to 8% dividend. And there's ways actually to deduct that interest off on your taxes that you're able to do very effectively. So what's happening is this, guys. You have money going in the account. It's growing at 6 to 8% gross annual dividends. You're going to borrow that money out. You're going to go invest it or pay down debt, one of the two. You're going to go invest it, though. And if you're paying 5 to 6% interest to borrow, that means whatever you do to invest, you need to make more than 6%. Okay, if you don't make at least that, it's not going to make much sense to you. So you need to make more than 6%. So you're doing that. Let's say you're doing one of my deals. My deals are going to pay anywhere from 8 to 12%. So you're doing one of my deals. You're earning 8% to 12% on that deal. You're still earning the 6 to 8% dividends. You're paying your loan back early with the cash flow. You're writing the interest off on your taxes. That really is how the system works. Now, if we do the math on this, okay, you're earning a 6% to 8% dividend. So let's say best case scenario, 8% dividend. And then you basically are going to pull that money out. You're going to do a deal that, let's say, pays you 12%. Guys, that's a 20% gross annual return. Now, when you do the loan repayment and the deduction, your interest, your net dollar interest goes down to about 3%. So if I make 20 and I pay 3, guess what I just did? I just made a 17% annual interest rate between my sacred account and between my investments. So guys, that's how the sacred account works. Really quickly, I'm gonna drop a link in the comments here. It's an article I wrote that's gonna describe all of this to you. If you wanna learn more, click on that, and it's gonna be right there in the comments. Thank you for watching. Like, share, subscribe. I'll talk to you soon.